I think they have gone from doing everything they can to delegitimize gold and silver to making it far more in-your-face overt. Of course, you know that the U.S. just reclassified silver as a critical mineral amongst many others, and the amount of gold and silver that have been brought into the COMEX since last November is off the charts, and somewhere in the neighborhood of 200 million. But there are reports that just came out in the Financial Times that said that governments around the world are reporting roughly 1/3 of their official buying, down from about 90% 4 years ago. That's according to the World Gold Council. And then China, which is the world's largest producer and consumer of gold and the second largest of silver, certainly not being transparent how much they own, 10 times, they assume, more than what they are reporting. And they're also, they just came out and said they're going to limit exports. They're going to tighten silver exports. This is a race, if you will, to accumulate physical metal. And I think the government understands that, not just physical metal, all critical elements. And I think it's no longer about promises from a broke country, in other words, taking our treasuries, and more about who's got the real stuff. You can see this in the amount of deliveries coming off of all of the world's exchanges. You can see this in how the people that are importing hundreds of billions of dollars of metal into the United States are the most, not just the most well-funded traders here in North America, if not the world, they're the most well-informed. But that goes hand in hand with what the central banks have been doing. Central banks have been buying gold. Here you have and silver and other commodities, that you have the most well-informed traders in the world showing you what they are doing. And it's gotten to the point now where there's no reason hiding it any longer. And in particular, if you do want to debase or devalue the dollar, you do it in raising the price of all of the world's commodities, because we've become too accustomed to measuring the currency against a basket of crap currencies, the dollar index. It's not how you should do it. Dollar is down 8 or 9% against the dollar index, mostly the euro, but it's down 70% against silver, 65 or so percent against gold. And so I think it's come to the point where perhaps they do want to debase the currency. Even mainstream media is talking about it now, that it's not a hidden agenda. To me, what they aren't talking about, everyone says it's to pay down the debt. To me, it's bigger than that. It's to be able to have an inkling of a chance to start to sell your manufacturing to the globe. It would be one of the first steps. Now, you could argue that it's premature to do it before you bring your manufacturing back, but I don't know if there is a plan or a strategy on how you do this. It seems to me that the best way to do it would be to let gold and silver move up organically for a while and then maybe revalue it at some point. But I do think that's what they're doing, and they're in your face with it now by taking these positions in companies like this. There's no question about it. I think you'll see more and more of it. It's never really a great deal when you have the government in private enterprise, but I do think it goes to show the desperation of a country that realizes that these items are critical, and we are way behind the 8 ball in accumulating them, in refining them. It's not just the accumulation. China is responsible for the refining of 90+% of all the world's rare earths. So it's not just in pulling it out of the ground, it's refining it. And it's interesting. You look at a country like China, which is the second largest producer of silver in the world. They tell David Morgan when he went there, no, we're number one. They're either one or two. They're arguably number one in gold. Now, you talk to Sean Kunkun, who you know, the CEO of Dolly Varden, and he'll say to you, stupid cord, he'll say to you, yeah, Andy, China is flying all around South America, in particular Peru. You mentioned deep water ports. China just built a deep water port there. The Belt Road Initiative is building things like deep water ports, rails, maritime channels, bridges, gold and silver mines, oil refinery. They're building it all within this ecosystem and then helping get it to market. Well, they're going to Peru and to Mexico, buying it in doré and concentrate form before it's even called silver or gold, and shipping it back to China where they refine it themselves. There is a rush to get the stuff. And thank God, in my opinion, somebody got to Trump, because all of this started in terms of importing into the US somewhere around November of last year when he won the election. There is no question in my mind that someone got to him and said, we are losing the race. The last administration really put us behind the eight ball. We need to do this right now. And I think that's what this is all about. So to your point, yes, it's not really normal. It's somewhat surprising at first glance, but to me, it really isn't. And I think it's a necessity. Heather has taken stakes in other parts of the gold supply chain, including royalty companies. So much like the government, you got Tether with a $180 billion balance sheet in reserve assets. They're hoards of gold, some of the world's biggest outside of banks and nation states. They're doing the same thing the government is doing. Now, you have to wonder, is there any coordination here? Bo Hines, Trump? I don't know. I'm just saying, to me, there is. Well, first of all, I would argue that there is basically no independence with the Fed. None. I mean, it's funny, too, because Goldman Sachs says, if the market fears that the Fed has lost independence, you'll see gold at $5,000 very quickly. Well, when you have the architect of the Mar-a-Lago Accord, Stephen Miran, fill one of the vacated spots at the Fed, who was Trump's advisor, what independence? There is no independence. And all of the people that you see leaving, there's another one who was just flagged for impropriety with trading. I forgot her name. This just came out a couple of days ago, but she was trading stocks that she shouldn't have been when she shouldn't have been. She's going to be gone too. You're filling these positions with people who I think Trump is hand selecting. And so therefore, what independence? There is no independence. Perhaps Powell is the last piece of pushback, but I think you are beginning to lose independence quite substantially. And as far as what the Fed is doing, I would argue right now something just happened that I think people need to be aware of. Nomi Prince did a great job in writing about it. And something is happening beneath the surface of the financial system, no question about it. And that's the thing that right now I think people need to pay attention to. And it's hard to pay attention because it's not really in your face. The mainstream media doesn't report on any of this. And you're, of all the people I interview with, you are top one or two most well-informed. Now, I don't know if it's because you do so many interviews or because you're like me and read 3-4 hours a day to understand what's happening. But you always have pushback, and the questions you ask me are always well-informed. But you won't find any of this stuff on the mainstream. What I'm getting at is over a 5-day stretch over the last 2 weeks, the Federal Reserve, which has been talking about ending QT and maybe going back to QE and lowering rates, but what they did when no one was looking is they injected $125 billion into the repo market. And they call it in an effort to ease funding stress, right? Which I don't believe, and I'll tell you why in a second. First of all, an injection of that kind of money, $125 billion in a few days, is crisis-like behavior. And it's pretty much on par with what we would have saw when Lehman Brothers collapsed in the great financial crisis in 2018, and almost exactly what we saw during the 2019 repo blowout, where the overnight lending rates went up over 10%. First of all, for people to understand, the repo market is the plumbing of the financial system. It's where banks lend to each other literally overnight. And this keeps everything flowing. Normally, this market is quiet, and that means everything is working. You never hear about it. But when the Fed suddenly steps in with huge amounts of cash, it's the equivalent of hearing a loud banging noise inside your walls whenever you turn the water on. Something isn't flowing right. But what makes all of this really concerning to me, Jay, which is so different than the 2019 issue and the 2008 issue, in both of those issues, they call it a liquidity problem, right? The banks didn't have enough money and they needed liquidity. The Fed had to come in and provide liquidity. And that's exactly what we saw back then. This is not a we're out of money problem right now because the banks have twice the amount of money that they did on their balance sheets in 2008 and again in 2019. They have twice the reserves. So In an environment like this, the Fed rarely, if ever, steps in to inject liquidity because these banks trade with one another overnight. I'm Bank of America. I'll do a repo trade with JP Morgan where I'll take your treasuries. You'll take my treasuries. I'll give you money, or I'll take your treasuries. I'll give you money, and you buy them back the next day. This is to relieve overnight funding stress. Jim Cramer talking about gold, run. CNBC and Fox, take it with a grain of salt. When these guys are talking, it's insane. And I will tell you that the level of business that we have, and we'll do a lot of $700-800 million in sales this year, a lot. That's mostly from much larger orders. Our average order size is getting pretty well near 6 figures. Not always. We work with all size clients, but you're seeing way more and way more 7-figure orders. But we're not seeing the tremendous flow that we saw during Silver Squeeze when everyone put even $1,000 into gold, silver, whatever they could get, 2,000 orders a day. Now it's 200 orders a day, but much, much larger from people who are paying attention. So no, the public is far away. They're all in on equities, on margin, and on leverage. As the insiders, whoever the hell they are the most well-informed traders in the world who are standing for delivery on COMEX and draining the LBMA. They know what's coming. These people don't do things just for the hell of it at that level. They know the inside playbook, if you will. And that to me is what gives me comfort. Not only are the top analysts saying, buy gold 20-25%, what do they really think? But whoever is importing this kind of quantity in gold and silver into COMEX, you have to say to yourself, these people at that level, they know what's going on and they are preemptively preparing when the public is just blissfully whistling Dixie into the stock market on leverage and on margin. What could possibly go wrong?